So my name is Seth Mom, and I'm the CEO of Liquid Group. We're an exchange based here in Asia. We operate in Japan as well as in Singapore, and we cover, primarily Asia, but really have a reach globally. I guess what brought me into the Stellar Development Foundation fold and starting to learn about Stellar was really going back to last year when Ethereum gas prices started really taking off, and it became a real problem for me as the CEO of the exchange, managing increasing fees for transactions. And of course, we've seen the rise of the importance of stablecoins, and there was just a huge amount of growth. However, it was causing a lot of friction for our clients and unhappiness with us as an exchange, not necessarily associating or not able to differentiate between network fees versus what they're being charged by the exchange. So that kind of led us to Stellar and what was being done with the USDC first and foremost, and being able to take advantage of all the high throughput and fast transactions, low fees of the Stellar blockchain. And then we've been starting to work with other stable coins such as the Settle coins, the ARST and the BRLT, which we plan to be listing on Liquid very soon. So with that said, I'm very happy to be here and looking forward to meeting my esteemed colleagues.
Awesome, thank you, Seth. Meinhard, do you want to go ahead?
Sure. Yeah. Thanks for having me a third time in a row, third year in a row. So I'm the founder and CEO of Satoshi Pay, and yeah, we've been in the Stellar ecosystem for since 2017. I'm personally already since let's say 10 years in the crypto ecosystem. Essentially a coder since I was 12 years old. So I kind of look at things from a technical perspective, and that's kind of what brought us to Stellar initially. Fees, obviously, as already mentioned, was a big thing. Bitcoin fees in 2017 went through the roof as well, 16, 17. And but also the governance of how Stellar is run, and also the sort of no hype approach we like a lot. Kind of also this translates to very down to earth decisions on a technical level, and that really appealed to us. So we have several touch points with the Stellar Foundation. There was a collaboration regarding user credits for our products, but also some funding. And also we run a lot of nodes, and yeah, we are very active contributors. We also run Solar, which is like a Stellar wallet for all platforms. And as products, we have like a Stellar-based micropayments product for digital content. And then also D-Transfer, which is a cross-border money transfer service for businesses, also leveraging the USDC and Euro token as stablecoins and also others. So really kind of doing the whole chain on the Stellar chain of the whole life cycle of a cross-border transfer. And as our latest addition and like largest project so far, Pendulum, which brings DeFi to Stellar, and almost as a side product or side effect, some smart contracts also. So we've just closed a $5 million private pre-sale for that. We're now working on our testnet. And also we have built a playground, as we call it, for Pendulum, where you can try out AMM and also bridging funds over from Stellar into Pendulum. And that's available in the Meridian demo section. So have a look at the Meridian demo section. You can see a full introduction by Torsten, our CTO there, and kind of very soon also be able to try it out yourself. So yeah, happy to be here and happy to talk about growth.
Awesome. Thank you, Meinhard. 3 years in a row, but each year you bring something new and exciting that you're building on Stellar. So happy to hear about it. And of course, last but not least, Patrick.
Hey, Boris, thanks. And good to hear from the other guests on this panel here. And I'm pleased to be here with them. So I'm Patrick Campos, the Chief Strategy Officer from Securrency here. I'm speaking to you from Abu Dhabi, so not quite as far as Tokyo, but still it's late at night here. Securrency is really a blockchain-based digital assets infrastructure company. We focus from the beginning on digital security, so regulated assets, and we built out a pretty comprehensive infrastructure. But specifically in terms of our relationship with Stellar, which goes back quite some time, and we've really enjoyed a great relationship with the entire SDF team. But very specifically, we've done a couple of things that I think are notable. One is, we've worked with them on a pilot project on traceable loans, really demonstrating how multilateral organizations providing much needed lending into developing countries can do this in a very transparent manner that ensures that the value gets to where it's most needed. And in addition to that, we've also built directly onto the Stellar network, onto the Stellar ledger, certain functionality that's required for regulatory approval of securities transactions on a ledger. So most specifically the clawback capability, and that was done fairly recently. So again, pleased to be here and looking forward to a great discussion.
Awesome. Thank you very much, everyone. So let's jump into our first topic, which is, looking forward, will Stellar continue to have a primary focus on remittances, or should it look at other payments use cases? And to provide a little bit of context to this discussion, as many of us know, Stellar was designed from the beginning as a platform that makes sending payments as easy as sending an email. And to date, much of the activity on the network has really focused on cross-border payments, and in particular, the subset of remittances, which for anyone who is not familiar, remittances refer to high volume, low value P2P payments, peer-to-peer payments, so typically going from a developed area to an underdeveloped area, where people living abroad are sending money back to their families. But of course, there's a lot more to payments than just remittances, even within the cross-border subset. And so the question to the group is, do you think the Stellar network should continue to focus on remittances as a primary use case, or do you see a bigger opportunity in other areas of payments like B2B, consumer to merchants, so buying things from merchants, or something else entirely like payroll? Mary, I think, when you and I were discussing this earlier, you've done some work around remittances in your part of the world in Latin America. What's your take on this?
Thank you, Boris. Well, my specific take, I don't want to say I'm a bit biased because Settle focuses on remittance and cross-border payments, but also I believe that definitely remittance, P2P payments need to be predominantly and need to be the main focus of Stellar, specifically for the reason that I believe everybody will agree is one of crypto's main use cases. I think that if we look at in the crypto space in general, we can see many use cases, but the real one that we're seeing a lot of people going into, and the real reason why people today are buying Bitcoin and buying crypto in general, is because of hedging inflation, because they need to send money abroad, etc. And I think that is a real use case other than speculation and other uses that we've seen that are not as predominant or not as more of a long-term solution. So remittance, I think, is the most relevant use case in the crypto industry, and it's in the highest demand in developing economies. So if we're looking at having a developmental impact in terms of financially, I believe remittance is definitely a focus Stellar should maintain.
And Seth and Meinhardt, you both may take an opposing view here. I know Meinhardt, for instance, you've spent a lot of time working on a different part of payments around micropayments and B2B. What do you think? Is remittance the be all end all within the payments sphere, or do you see it otherwise?
Yeah, so I wouldn't say opposing. Obviously, remittances and cross-border transfers are very important for us as well. But those can be done in other chains, let's say, for example, as well. But what I really would like that micropayments or even nano payments continue to be possible. So we have the 5-second final settlement. That's amazing. That's not really the case in many chains. And also the super easy token setup. So like sending a fraction of a cent in a different token is amazing. Like a tenth of a cent over the network in 5 seconds. So yeah, please make sure that the fees stay low as they are. Scale as you must on chain. That's very, very important. So I think micropayments, it makes it still very special also for us, and we use this heavily in one of our products, obviously. Also, of course, B2B payments are a focus of ours that we would like to continue doing on Stellar, obviously. So yeah, the focus on compliance and having an easy on and off ramping, I think, is the key there, meaning building more anchors, supporting anchors as much as you can, and also have like anchors with like a business focus or an easy business setup, and feed into compliance frameworks, as already mentioned. In Europe, we have MiCA and DORA, so these kind of things should be made possible as well, and are very, very important for businesses to operate on Stellar. And yeah, obviously the stability and safety that comes through the focus on the basic building blocks of a chain. Don't go too crazy with everything, kind of focus on the simple things that you do well, and kind of, yeah, keep that approach. That would be my plea, let's say, to SDF, as much influence as you have. Yeah, those two things are the main use cases I see.
Got it. And Seth, you know, from your perspective at a major exchange, you serve both retail customers and institutional customers. What do you think is the most interesting or most attractive opportunity within payments from the perspective of a major exchange? What are your customers asking for that you think Stellar should focus on? Seth, I think you are muted.
So sorry about that. I definitely concur with some of my colleagues, right? I think, you know, one of the most important factors is the fast transaction confirmation times and low fees. So where we're seeing adoption, and I think we have a really good, interesting use case at Liquid, because we had listed the USDC ERC20 a couple of years ago, and then we listed the Stellar version of USDC. I think it was around May of this year, so much more recent. And what we've seen is really a nice pickup of usage of the Stellar version of USDC, in particular because of, you know, the much lower transaction costs. And what we're seeing is that in some cases you're seeing a lot of peer-to-peer type of payments for people, where they can really take advantage of those lower costs. And, you know, I would expect that adoption to increase. So what I measure is sort of the percentage of USDC that we hold in each network, and I'll expect that we'll continue to see this growth of USDC and in Stellar in general, so long as, you know, transaction speeds are fast and costs remain really low.
Yeah, it's interesting. You know, remittances and micropayments are quite similar, actually. I was just thinking, because typically remittance payments tend to be very low value. And so, you know, if you can do micropayments efficiently, just as efficient as, you know, the large ticket transactions that some of Liquid's institutional customers may desire, then you can really, you know, address the full spectrum of payments in all of their variety. And this got me thinking, we've been speaking about cross-border payments in particular, and of course, you know, we all know that there's a lot of friction in cross-border. What about domestic payments? Is that a solved problem, or has that been, you know, has that reached perfection, or is that something that we should be thinking about as well? And by we, I mean, you know, the whole Stellar ecosystem, open to anyone.
Definitely, Boris. And I think that Vibrant is trying to capture that market. Vibrant has launched in Argentina, focusing right now to offer Argentinians the possibility to buy USDC out from pesos and ARST. And the biggest challenge there is focusing on solving. In the US, you guys have Venmo, but in Argentina, we don't have such thing. And there is no such thing in Latin America in general. So solving that payment situation, local payments or bill paying, or salaries, etc., or type of small transactions as well, I think it's a great issue to tackle. And I believe Vibrant is trying to go into that direction, but there's still a lot of work that needs to be done.
Yeah, makes sense. And Patrick, I want to get your view here, and it's a perfect opportunity to shift to the second prompt, the second topic, which is around payments versus everything else. There's a big world out there. What other areas can Stellar address? And just to provide a little bit more context, we've talked a lot about cross-border payments, domestic payments, both micro payments and larger ones, and certainly a lot of the efforts of the various teams building in the Stellar ecosystem are focused on driving the role of Stellar as a payments network, both domestic and cross-border. But as big as the payment space is, there's plenty of other interesting use cases for distributed ledger technology and for Stellar specifically outside of payments. So the question is, what other areas should the Stellar ecosystem be focused on? Is it payroll? Is it credit on the blockchain? Is it tokenization of real world assets, NFTs, DeFi, and the list goes on and seems to be growing kind of every week. And so, Patrick, I'd love to hear a little bit about how Securrency looks at this, maybe diving into a little bit about what you're doing with Securrency on Stellar and how that may or may not bridge into payments.
Yeah, so look, this is styled as a debate, so let's spice it up a little bit. I think it's a no-brainer, right? I mean, I'd love to hear the other side of this argument because let's think about in our name, for example, we contemplated right from the very beginning that value is value, and how you want to hold your value and transact your value, is something of a personal decision. So if I want to hold and transact in value that has an investment thesis around it, I should be able to do that. Hence the name of the company, right? Securities and currency kind of amalgamated. And what we found, obviously, you've ticked off a list of all sorts of value that's been created, and some of it is poo-pooed by different people in, sort of, the mainstream world, but it's value. And so I think that, when we think about, if you say, well, should the Stellar network be limited to payments? The question is, well, what the heck is a payment? And when you really expand on that question, again, I think it sort of answers itself. We've been, as we've been really focused on digital securities, but not just digital securities, but making them accessible and transactable as payments. And this is a really important thing. That isn't to say that everything that purports to be a security and that is tokenized has exchangeability in that sense, or transactability in that sense. But many of the things that we transact in as securities on different rails, have the kind of liquidity and the kind of stable value that that people would desire, and that actually begin to replace the concept of a bank account. If I can hold my assets, my investment assets, and transact in them, we're really reimagining where things are going, and so in that sense, I think Stellar really positions itself as a low cost, high speed network of possibilities. And so again, I'm ready to hear the other side of it, but I'm not sure there's a good argument that the network should be limited to just the sort of traditional things that we consider as payments. Drop the mic there.
Who wants to react to that? Or should the Stellar network focus on many things, including payments and something completely apart from that, like NFTs, with an ultimate aim to bring the two together?
Absolutely. I agree with Patrick in this sense. It doesn't need to circumscribe to a specific vertical in payments. And I think that you mentioned NFTs. Definitely there's a lot of incoming on the gaming space, but also there's a lot of total value locked on other blockchains that can definitely be used in Stellar, specifically on everything that has to do with DeFi products, right? Farming, yield, lending, staking, so many things that can still be merged into the Stellar ecosystem. And this will definitely, encouraging all of these areas, will definitely bring a lot of that value from other blockchains into Stellar. And then they can definitely look into other, like the main core of remittance and cross-border payments. But I think that as we expand and as we, provide more uses and more verticals for the community, we will have more incoming players to build on Stellar. And I think that is the ultimate goal.
That makes a lot of sense. Seth, you guys work with a lot of different blockchains, a lot of different use cases, a lot of applications. What do you think is the most exciting? What do you think Stellar should focus on?
Yeah, so I think we've definitely seen a lot of interest from our user base in, I almost want to say like debanking themselves or unbanking themselves, right? I know that's a phrase others have used, but I think we're really seeing it. And so I think if you think about crypto and what it unlocks for people, it certainly unlocks like a lot of self-sovereignty in terms of having your own wallet, faster settlement times, which is really important in many different contexts, which we've already discussed here. But I think what people are really looking for, and we've seen this in some of our product offerings, is the ability to also find ways to monetize and sort of earn on some of their crypto holdings. So I think further development of yielding products and liquidity pools, these are going to be things that will really help that sort of transition I think we're having from sort of fiat-based to more blockchain-based ways of managing our finances.
Meinhard, what's your view on payments versus non-payments?
I mean, payments obviously should not be switched off, so keep them. Non-payments, I mean, there's things like NFTs are interesting, but that is kind of opening a can of worms. Once you have, NFTs as a special sort of asset in there, then the next thing might come along, and then there might be the effect of feature bloat, and then I think that's definitely what you want to avoid on like ledger size, but also in terms of code base. What I think should actually happen is CBDCs on Stellar. I mean, there's a great deal of talk about that. I want to see it. I want to have a CBDC on Stellar, next year. So that would really increase the quality of fiat stable coins and then also the reputation, I would say, of Stellar. So yeah, that's something definitely I want to see. I mean, it is again an asset. So technically, I think it's not really any different from what's there now. It's really the focus of business development, I suppose, of the Stellar Foundation or some other entity that works closely with the government to make that even happen. And one other side thing, I mean, simple things like notarization. I mean, we have this timestamping engine that works perfectly well. And we don't really see that being used in notarization at all. So maybe there's an angle to bring that to the world where, you need like a notarized land registry or these kind of things. So I think it's a basic feature technically, but the impact on societies around the world can be quite significant.
I agree.
I want to add something. I believe that all of these verticals are very good, but there is a very big need from Stellar to create those incentives so that other projects, companies, the community can start to build all of these items on top of Stellar. And as long as Stellar keeps providing those incentives that, that allow other companies to build and create value, but also to generate a profit and revenue, I think Stellar can become the #1 blockchain within months, definitely.
Yep. Incentives are definitely important, as we've seen with the growth trajectories of lots of companies in the space. So with that, let's move on to prompt number 3, which we touched on briefly around AMMs and DeFi and what will be the impact of this on the Stellar ecosystem. And so just a few weeks ago on November 3rd, we saw Stellar validators vote to upgrade the network to Protocol 18. It's a big upgrade in the ecosystem, and so Protocol 18 notably added automated market maker (AMM) functionality to the Stellar protocol, so natively in the protocol itself. And to quickly provide some context for anyone who's less familiar with the concept, AMMs, or automated market makers, now enable interfaces that allow users to deposit all sorts of assets into liquidity pools that generate a return for them, while also helping to create liquidity for cross-asset conversion, which is really a lot of what Stellar is about, is allowing people to go from one asset to another. And so this is liquidity that the whole ecosystem can leverage. And what's particularly interesting about the Stellar implementation of this is that it's a protocol native feature, which means you don't need smart contracts to create liquidity pools, which increases access to this. But also it's that these liquidity pools can coexist with the Stellar decentralized exchange, or the DEX. So it's not replacing it, but rather it will coexist alongside it. So now cross-asset payments, whether cross-border payments or anything else, can be routed either through AMM liquidity pools or the DEX, whichever one yields the best conversion rate. And so with that context, the question to the panel is, what will be the impact of the launch of AMMs on the Stellar ecosystem? Who will we see uptake coming from? Will it be from traders, speculators, or anchors, or somebody else entirely? Is baking the AMM into the protocol layer itself, as is the case here, the right approach, or should it be on a kind of application level? Who wants to opine on that piece? Meinhard, please.
Yeah, so maybe I go first here. It's you kind of prompted already a response here. So baking it into the protocol is one approach, and that it's here now so fast, that it was delivered in such a short time, is pretty amazing. What we saw, or what we see still, is that it's kind of inflexible in some way by design. But if I want to have, let's say, the latest swapping algorithm, or like a slightly optimized algorithm for a specific use case, and just want to kind of make that interact with NFTs and these kind of things, or like foreign tokens from other chains, we are hitting limits really fast. So, and also, if you want to have a new protocol version and you want to roll it out to the main protocol, this might become slow. So while it covers a certain minimal use case and brings liquidity to the network, which is great, and people will start staking, and we can also leverage that on other side projects, or like side chain projects. But for example, if you want to have parallel AMMs, like different approaches, kind of let them A/B test against each other, that wouldn't be possible. And I kind of, as I said, I like that it's by design like that. But yeah, we think like a generic smart contract is a solution to these things, where maybe even that's something that proves useful can make it to the main protocol. But in a playing field where you can, as a developer, develop your own flavor of something, and then kind of let it try out, and then adjust it a little bit again, and then you don't have to roll out network updates to all validators at all times. So, and then also with a smart contracting language, like a generic smart contracting language like Pendulum offers, you can do things like NFT royalties, or even ERC20 support that I already mentioned before, or like a loan application, anything sort of arbitrary that you maybe use from other full smart contract networks. And also oracles can be implemented in a nice way, kind of voting against each other and these kind of things. So I welcome it, definitely. And we were happy to see that developing so fast. But even before we set out to build Pendulum, we knew that AMMs will come. It didn't stop us for all the reasons that I mentioned before.
Seth, what are you seeing from your vantage point in terms of how DeFi might impact the ecosystem?
Well, I think there's a great opportunity. It's clear that people like to have the flexibility of entering into the DeFi ecosystem for lending, liquidity providing, swapping. There's all kinds of use cases. And what's really amazing to me is that we've seen the growth of DeFi on the Ethereum network, even though the transaction costs may be, I mean, you know, could be $30, $40, $100. So it's prohibitively expensive for people to participate in smaller amounts, because the transaction fee I see sometimes you'll see on Uniswap or liquidity pools, where the transaction fees are greater than the actual value that's being exchanged. So I think there is a great opportunity to develop more DeFi applications on top of the Stellar blockchain. And I just, it requires support and more participants, and I guess, but it'll come, because what we've seen for sure is that the market has a way of people tend to gravitate towards better, faster, and lower cost. So I think if a lot of the infrastructure that's already out there on other blockchains is able to be developed on top of Stellar, you're going to see explosive growth there.
Open question to the group. We have so many companies that are actively developing applications for users, but in the background, kind of underneath all of that, we see on Stellar, as well as every other chain, a lot of the activity being driven by speculative trading.
Yeah.
And is this activity helpful or hurtful? Should it be fostered? Is it sustainable? How do you folks see what is the role of the speculator in the space?
Yeah, can I, if you don't mind, because I manage a trading venue, so I sort of have mixed thoughts about it, right? So without this, and I think in a lot of new asset classes or even in technologies, it starts off with speculation, and that's an important sort of bootstrapping, if you will. But if the technology and the use cases end there, it will die a very quick death. Is it useful or not? So I think it's mixed. And let's give some examples. I do worry about things like, the things, the growth of meme coins that maybe don't have a lot of utility that anyone can really think of. But there's, a huge amount of marketing behind these projects, and there's, ideas about people getting rich quick. This is problematic. I speak for myself here. So I had a 3.5-hour call with the Singaporean Monetary Authority, and as part of our licensing process. And this sort of speculation or opportunity where sort of consumers could get damaged from over amount of speculation is not something that they're really, they don't want to see their licensees sort of participate in, right? And I see another example happening right now with one of the stable coins, where the price of the stable coin, simply because of the supply demand dynamic, the price of the stable coin as compared to dollar is maybe 4 times greater within the DeFi universe, simply because traders see the price going up, not really considering that it's a stable coin, but they see it going up. So more traders come in and they buy it because it looks like it's got a good chart or something like that. Sort of ignoring the fact that the asset itself is a stable coin, it is designed to have a stable price. And due to certain lack of liquidity, this phenomenon is happening. Again, not a good thing for the blockchain, for the community. So I think there is a balance that we have to find.
Yep. And Seth, sorry to cut you off. I think that's a fantastic point. And you have a great perspective on this from where you sit. I just want to make sure we keep moving and don't run out of time. So apologies. Let's, with that, move on to the fourth and final prompt, which is around scalability and what the path forward looks like there. And so, we've discussed a wide range of use cases and applications of the Stellar network so far. And of course, that means we need the network to be able to scale with this increased traffic that these use cases are generating, both speculative use cases, as Seth was mentioning, as well as perhaps more real use cases. And luckily, the Stellar Consensus Protocol is one of the more efficient consensus algorithms especially among mature production-ready blockchains. But that doesn't mean that Stellar doesn't have its own limitations, as all decentralized systems do. Today, we're seeing Stellar running at around, on average, 25 to 40 to 50% network capacity. And so the question is, you all build products on the Stellar network. Do you see this as a concern, or do you breathe easy because we have plenty of room to go? Perhaps surge pricing for transactions will kick in once we start reaching the upper bounds of scalability and essentially help to prioritize network usage. How do you folks see this question? Meinhard, do you want to kick us off?
Sure. So I mean, at the moment, yeah, capacity is abundant. But we have also seen, so we've been part of the network for quite some time and running nodes, and we see the ledger size and syncing of like a full history node is taking quite a long time and resources, like CPU resources. You need quite powerful computers to run a full node. So maybe some sort of sharding would make keeping the archive much easier. And we've seen surge pricing hit once or twice in the past, and one IoT focused project with millions of transactions because of millions of devices famously changed chain, and then surge pricing went down again. So it's not the chain for each use case. And that really plays also into our general approach that not the vertical scaling of chains is the way to go. That you kind of make one chain, have as many throughput as possible, as much full throughput as possible, but kind of go horizontal and maybe add side chains or like bridging chains. And so not to toot my horn, I hope it's not rude to toot my horn too many times here, but obviously we are building something that can be used as an offloading mechanism also for Stellar-based activity. And that's really, I think we would like to see more of that, where we have projects linking to it. And also maybe a channel or a sort of a lightning system or network that adds a new layer on top of Stellar, an actual layer 2 to Stellar, would be a way to go. And we've seen activity in that, but we would want to see that also to be brought into production. So once we have a project that maybe wants to do IoT again or something else that's very, very transaction intense, give them the opportunity to also run on Stellar. So I think these are the main areas that I would like to see being invested a bit more in.
Yep. That makes perfect sense. Patrick, I'm curious to hear from your perspective. You speak with many large institutions, both traditional and more innovative. I'm sure the question or topic of scalability comes up in discussions with these partners. What do those discussions sound like, and how important of a topic is this to your stakeholders with your partners as they imagine the products that they envision building going forward into the years ahead?
Yeah, so it's an interesting question. I mean, frankly, it doesn't come up often, and the reason I think for that is that even though there's an awful lot of work being done, so if you think about it sort of, under the surface, there's a ton of work that's being done. What's above the surface, the actual assets that are, being put out there, it's still, a relatively small, number, and that's obviously going to grow exponentially in the coming years. So it's still at a stage, I think, right now with many institutions where, they're really focused on, really honing in on very specific use cases, and this is not yet an issue that that they think about. I think there's another aspect of it too, and that is that there's if you look within a lot of organizations, they're generally populated by people who are sort of, solidity engineers, and then they come from that background. And so when we introduced the concept, hey, you can actually do these things, on the Stellar network, it's sort of new. And so they're really focused on, hey, look at the possibilities here with the speed and the low cost. And so that tends to take precedence over sort of, some of the more background issues as they dig in a bit further. So we're still, it's a rapidly expanding market when we're talking about institutions, but it's still early days yet. And they're not yet in that sort of, let's call it, grungy, cynical phase of thinking about esoteric issues like this, which we know is true in the in the broader crypto community. So not really an issue that comes up often, but as we as we see the more rapid adoption, which we anticipate in the next couple of years, that will be a topic for conversation.
Makes perfect sense. And Seth, I'd like to hear from your side. Obviously a centralized exchange, the trading on your platform does not depend on the scalability of each blockchain on which the assets are built, but certainly the funding, the deposits and the withdrawals and any other kind of tangential use cases that you want to build do depend on that. And so how do you see network scalability from your seat at Liquid? And you're muted, so.
Apologies. Yeah, no, you're quite right. So where we're seeing a lot of uptake is when people have a better on-off ramps to the network. So when the network utility increases, it sort of drives further adoption. And I think where we're seeing a lot is people look at our Liquid exchange as sort of a gateway towards a decentralized network like Stellar. And the more access that we build, I think the more adoption that you start to see that's happening on chain as well, with any number of different applications that are being built. So I guess the more applications that are built, the more use cases, it just kind of further encourages people who are not yet in the crypto industry, and all of us already are, but sometimes you have to take a step back that crypto is still in its very beginning stages, and still you probably have at least 90% of the world that's not really holding crypto or using crypto in any manner. So as the scalability and applications are growing, the demand for better on-ramps onto the network are increasing, and that's kind of a big focus that we have at Liquid right now.
Yeah,
Yep.
I agree with what Seth says, and that is the thesis that drove Settle to become mainly the largest fiat gateway in Latin America. We realized how the opportunity was there, the demand was there for people in LATAM to start buying crypto as a way to hedge inflation and hedge unstable currencies and volatile governments. So then we said, okay, the demand is there. How can we give access to all of these people? Originally, it was the informal market, the side market, people buying on cash, crypto on cash, and that of course is very risky for many reasons. And then we said, okay, let's start doing the infrastructure part. This will be the gateway, the key part, in order to then start building and start accessing DeFi products and more complex products in the crypto industry. But we need to have the door. And we need to create this for the community. So that's why we have focused a lot on having all the best banking relationships, talking to banks, talking with regulators, meeting with the central banks in different countries, explaining what crypto was and trying to get an account, get a payment processing license, get all of the licenses available, and focusing a lot of compliance so that we could enable fiat gateways and fiat on and off ramps.
Awesome. Well, thank you all of you so much for joining today. We're out of time, but I'm truly so thankful for you to come from Germany, from Abu Dhabi, from Tokyo, from Buenos Aires, and contributing to this discussion today about the future of the Stellar Network. So thank you very much again for participating. and for everything that you do every day to make Stellar the vibrant community and ecosystem that it is. And with that, I will pass it back to Justin. Thank you very much.
Thanks, Boris.
Thank you, Boris.
Yeah, that was great. Thanks, Boris, for leading that. Thanks, Meinhardt, Seth, Mary, and Patrick for participating. Those are really great insights to see about your own work and about existing gaps and what you think we should focus on next. I got to say, as Boris was saying, I think this dialogue, this engaged ecosystem, it's one of the greatest things about the Stellar Network. And I hope you all enjoyed this discussion as well out there in Meridian land. All right. After the next break, we'll be back with our last debate where we're asking our speakers to look into their crystal balls and share their predictions for 2022. So stay with us. All right, folks, we are back with the next quiz question. What connects Stellar to traditional banking rails so that all the world's currencies can interoperate on a single seamless network? Options are central banks, credit cards, anchors, IOUs. Submit your answers using the quiz tab, and I will be right back to share the correct one momentarily.
Hi, my name is Ben Grossman, and I'm a Senior Ecosystem Marketing Manager at the Stellar Development Foundation. What I really like about being part of SDF is I get to work with developers, companies, builders, and entrepreneurs all around the world. And it's so cool how truly global blockchain is. And it's so energizing to come to work every day with people from different countries and backgrounds building great products on Stellar. It's been a really exciting 2021 for us at SDF, and I'm looking forward to our upcoming Meridian event, the launch of AMMs on Stellar, and right around the corner, a really exciting 2022. So come join us at Meridian, and we look forward to seeing you there.
Okay, everyone, I am back to share the correct answer to the quiz question, which was, what connects Stellar to traditional banking rails? The answer is anchors. By providing access to local on-off ramps, anchors empower the apps and services built on Stellar to provide borderless access to financial infrastructure. Anchors. So as a reminder, we're going to follow up with the quiz winners, the first 3 to answer each question correctly after the conference. Don't worry. But now I am pleased to introduce the moderator for our next debate, SDF's Director of Ecosystem, Matthew Castricone. He has brought together an amazing group from the Stellar ecosystem to share their industry-wide predictions for 2022. It is crystal ball time. Matthew, take it away.
Thank you, Justin. Hello, everyone. My name is Matthew Castricone. I'm the director of the enterprise side of the Stellar ecosystem. The enterprise side is the companies who are building on the Stellar network today. This set of companies includes asset issuers, infrastructure applications, all the way to wallets, market makers, as well as the local fiat on and off ramps in each country. Today, I'm very pleased to be joined by 4 industry vets who come from payments and crypto companies, which are currently building on the Stellar network. Amit from Finclusive, Ruben and Lisa from AirTM, and Santiago from Bitso. Can everyone please introduce yourselves and explain a bit about your organization, starting with Amit?
Hi, thanks very much, Matt. And it's great to be part of this panel. It's great to be part of the Meridian conference. Stellar just does a fantastic job, and I want to thank you and the hosts in putting this together. Finclusive is an anchor on the Stellar network. We are a hybrid fintech, regtech platform. We provide a full service financial crimes compliance, AML, KYC, KYB stack that enables other fintech companies, other anchors on the Stellar network to have a standardized compliance capability across the globe. And we are an on-off ramp in the US, connecting to US fiat banking so that we can facilitate cross-border payments between issued assets, transacted assets on Stellar into the US fiat banking system. And by combining the two, we can create transparency, auditability, and all of the elements that are required from a risk and governance perspective, but do so by really enabling and taking advantage of the great technology that Stellar brings to bear in providing much more inclusive opportunities with a compliance-centric mind.
Thank you, Amit.
Should we jump in?
Yes, please.
Okay, I'll go next.
Thanks, Lisa.
My patience, I'm always the least patient. So hi, my name is Lisa Nestor, and I am also super happy to be here today. So thank you, Matthew. And as always, thanks to the wonderful SDF for organizing. As mentioned, I'm currently a strategy consultant and working closely with Ruben and his team over at AirTM, which has been an amazing opportunity so far. Prior to that, I was a very happy member of the Stellar Development Foundation team, where I worked for a little over 5 years. So there I started supporting partnerships and then eventually rolled over to the enterprise ecosystem, which was an incredible experience to work with a wide range of companies, from small startups to much larger enterprises, and supporting them and integrating Stellar and kind of thinking about their growth path now that they've entered into the digital asset ecosystem. So yeah, pleased to be here today and excited to participate in the discussion.
We're excited to have you.
Matthew, I can jump in as we can box all of AirTM into a set of back-to-back presentations. My name is Ruben Galindo. I'm one of the founders of AirTM. Right now, I'm AirTM CEO. And it's great to be here. We have been working closely with Stellar for about 6 months now, and we have tracking each other's progress for quite some time. And it's been amazing to see the development of the Stellar network over the last few years, as we have as an ecosystem pushed for more fair and freer access to financial services around the world. And working at different parts of the stack, it's very evident how we're all super important. We at AirTM specialize in giving people access to blockchain dollar accounts. And anywhere you see AirTM's pitch to clients, you won't see blockchain, because we try to make it all very easy for our users. And our partnership with Stellar will make it such that we will not just give access to dollars to people, but better access to not just dollars, but the Stellar ecosystem and all the infrastructure it's building. And I'm very excited to talk about what we think is going to happen during the next year. So thanks for having us.
Thank you, Ruben. Santiago?
Hello. So I'm Santiago Alvarado. I'm Senior Vice President of Product at Bitso, currently leading our institutional division. Bitso is a leading exchange in Latin America. We have 3.3 million users. We're end-to-end regulated and are focusing on expanding our footprint across Latin America. Currently, we have operations in Mexico, which is still our biggest market, but we have a significant and growing operation in Argentina and Brazil, and are about to launch in Colombia.
Great. Thank you, everyone. I really appreciate everyone being here today. And, you know, I look forward to a lively debate. So we're going to dive right in. Everyone ready? Okay. So we've all seen the headlines. We all watch the news. Regulation in crypto is heating up. Amit, you have some expertise, some experience in this area. So I would love to hear your predictions for regulatory action in 2022.
Absolutely. So, as most folks know, I'm a former regulator. I spent some time at the U.S. Treasury Department, the Office of Terrorism and Financial Intelligence, OFAC, FinCEN came under that purview. Our team has a number of ex-regulators as well, former Fed, and the like. I am quite, optimistic about the regulatory landscape into crypto. I think the fervor and interest has only grown, and that's a good thing. While some folks see that as potentially harmful, I think you need regulators on your side to understand, number one, that crypto decentralized financial services has left the station. right? That is a reality today that is growing. And regulators and policymakers, I think, you know, a year and a half, 2 years ago and prior were more resistant and or thought about the space as the Wild West, as completely unregulated, a number of folks that did not care about risk, governance, compliance, transparency. And I think the last year and a half in particular has shown that many in the sector really care about it and are developing innovative solutions. So I believe that interest and growth has comported with the growth in just the propagation of new assets, stable coins, alternative coins, the growth in central authorities like central banks, increasingly engage in central bank digital currency projects. The market capitalization of digital assets continues to grow into the trillions and beyond. So that train not only having left the station actually is a very good thing, because from my standpoint, from a 2022 and beyond, I think we're going to see a couple of things. One, we're going to see much more sector-driven guidance to the policymakers, to the regulators, because the policymakers and regulators, I believe, increasingly are seeing that they need a lot of learnings around the underlying attributes of blockchain technology and the capabilities that it affords, both in terms of driving inclusion, but also insofar as creating viable ways to address the intents of financial system regulation, which is consumer protection, safety and soundness. You know, the ability to actually protect people and their assets is key. And there's a lot of underlying technology capabilities that blockchain affords in doing so. The second prediction I would make is that anyone can build on blockchains, as we've seen, and certainly the last day and a half have shown that. And that means regulators have to get out of the boxes that they have traditionally been in terms of what certain financial intermediary types are. Are you a money service business? Are you a deposit institution? Are you a securities company? Are you an investment bank? Are you an asset manager? Are you an insurance provider? And I think more and more we are going to, it doesn't matter what kind of organization you are, and therefore what regulatory blueprint you might fall. It's really what activities and practices are you taking? And we're seeing that reverb across the board, US regulators and overseas regulators and the global standard setters for risk management, anti-money laundering, is, are you issuing value? Are you storing value? Are you transacting or providing liquidity, regardless of what kind of entity you are? And that, I believe, these activities and practices approach continues to gain much more resonance. The third trend is privacy. And that has been exacerbated in terms of importance over the course of the pandemic, access to personal sensitive information. And we now have capabilities to preserve privacy as well as provide engagement. And that is exciting because more and more, whether it's digital compliance credentials for identity management or streamlining the know your customer or know your business process, these are all hugely important to global regulators. And finally, I will say that we don't have a single regulatory conversation that does not include inclusion, right? It is top of mind of a lot of regulators. And how do we ensure access safely and soundly to financial services in whatever shape or form they may comport? And I think the innovation of that space from the standpoint of driving inclusion is being seen in these blockchain-enabled technologies and payment systems, and that's exciting. So I think that 2022 and beyond, we'll see greater growth in that space in a positive way, and that's not going to be without its hurdles and its bumps in the road. There's going to be plenty of that, but I tend to be fairly optimistic about it.
So I appreciate your perspective, especially given that you came from the regulatory agencies that are kind of looking at all this. Lisa, I know you have some thoughts on this issue, and I'd love to hear a rejoinder.
Sure. Yeah. I mean, I definitely appreciate Amit's rosy colored glasses when looking at the regulatory landscape. And, I do think that in parts of the world, that's going to be right. I definitely think that though we're certainly seeing some fumbles here in the US, there's overall a very clear desire to create more transparency, certainty, general, just understanding of the space and regulatory environment. Just this month, having the US Treasury publish a report on stablecoins, like really signaling to the market, an intent around this technology. That being said, the US is one place in the world. And, my predictions is that we're going to see a lot of negative reactions toward this technology in other jurisdictions, and it is going to be challenging for the industry. I think this technology moves very quickly, and I think though oftentimes the motivation behind things like, you know, blanket bans, there we go, blanket bans of cryptocurrency in a market, you know, to say, again, consumer protection, I think, is often kind of what we hear regulators pointing to as kind of cause for those types of things. But I think it's also very new. A lot of this stuff touches the core of economies and financial systems, and it is moving incredibly fast. And so I think we're going to continue to see knee-jerk reactions from regulators. You know, I certainly hope that kind of the opposite sides and opposite reactions will, you know, facilitate some middle ground where we can see more kind of global or multilateral discussions around this technology and what does consumer protection mean, like what are token taxonomies that we can all get around. But I expect to see a lot of rocky seas in many markets in 2022.
Yeah, thank you, Lisa. You know, we all, at least my team we watched the press release in the news about the current ban du jour happening in India. It seems new regulatory guidance comes out in India every 6 months or so. So I definitely share your perspective in terms of some rocky seas. However, you know, we have some experts in LATAM, Ruben and Lisa as well. And I'd be curious to hear your perspectives on kind of what's going on in Latin American markets vis-a-vis the United States. For example, I know that Mexico in many ways is very forward thinking in some of their thinking about crypto. And I would love to hear if you have any thoughts on this.
Sure. Like Lisa said, and like you share, there are rough seas ahead for any companies or organizations trying to do things in a new way. And, you know, the case in Mexico was, you have a very nice way of saying it or describing the reason why our regulation was put in place so quickly. I'm not sure it was because regulators were necessarily looking to create a very straightforward way for Mexican entrepreneurs to navigate the new landscape and to come into the very highly regulated banking and financial service industry. But you could say that the way the regulation was applied made it a bit more difficult for entrepreneurs to kind of embark on this experience. And they, in some ways, and as it pertains to crypto, did certain things without first understanding. And it's difficult to blame, right? Because on one side, you see how things could go astray for the Mexican economy if there's open access to any type of currency, for instance, and therefore you'd have incentives as a regulator to kind of make sure people are doing things or business are doing things in ways that are not going to lead to a big chaos. But at the same time, you could argue that 3 years ago when the regulation was drafted, the ecosystem was not developed to the point where they could see and understand how it all was going to shape up. If they were to draft regulation today, it'd be probably very different, right? And luckily, rather than going to the extent of creating a new law, other nations have taken the sandbox approach, which is it's novel and it's friendlier for innovation. In Mexico, there was a sandbox, but barely any new company applied for the sandbox kind of regulation or model because, you know, it was a bit uncertain. And presumably the activities which we were all doing, as Amit said, were already activities that were being facilitated by other regular financial institutions. And so you could have, for instance, for RTM, it was evident that we could, under the new framework, operate, and things shifted a bit. And another thing that's important to understand is that throughout the developing world, there's big companies that leverage regulation as moats to their market share, right? And therefore, local regulators and business owners have, a bit of a say in how regulation is shaped and what therefore we as entrepreneurs can do. Hopefully the decentralized nature of the industry will make it difficult for these moats to continue being had, and for regulators to just try to do their best effort to open up better access to financial services for their people.
Well, thank you, everyone. I appreciate the lively debate, appreciate the back and forth. I think it's going to be an interesting thing to watch, not only in this country, but in all the countries. I mean, it seems like every week there's new news out of China as well. So in the interest of time, let's move forward to the next prompt. And this is a slightly different issue, but in some ways, a corollary one. What liquidity gaps do we see across payments and crypto today? Santiago, coming from a leading digital asset exchange, do you have any thoughts here? I don't know. Did we lost Santiago? And that's okay. Lisa, you have a lot of experience in liquidity coming from SDF and working with AirTM. Do you have any thoughts about gaps in liquidity in payments and crypto?
Yeah, I mean, talk about moats. I think we are making a ton of progress as an industry. Moving from liquidity that's really tied towards trading to liquidity that still supports trading, but with use cases, really layered in there. And so, yeah, I think we, the things that have been really exciting to me in the last 2 to 3 years in terms of the progress we've made in liquidity have been really tying together, local fiat rails to the digital asset ecosystem. This is an area where, Stellar really focuses. I heard on the last panel, Mary talking about this right before we joined. And, I couldn't agree more that making sure that we're connecting legacy financial infrastructure to the new digital asset ecosystem, creates that front door entryway. And, continuing to invest in that so that we create really seamless on and off ramps, because, as Ruben and I often talk about, you can't convince people to stay in the digital asset ecosystem if they don't believe they can get out the door, right? So you have to develop that trust. You have to create very seamless experiences for cashing in and cashing out to kind of build that trust with your end user, to be able to convince them that they can really start holding, spending, saving, doing all these other things in digital assets. So I think that can continue to grow. When I mentioned moat, I think the big gap we have right now is continuing to source capital to support the liquidity that we want. And in this regard, I do think that kind of the wild, the kind of newbie innovation that we have that brings me a lot of excitement is DeFi and its ability to provide very interesting ways for individuals and businesses to contribute capital that can be used efficiently within these ecosystems. So, if I am an individual and I, have a stable coin, in Filipino pesos, and I want to somehow now, earn some yield on that, how can we start breaking down the barriers to, me putting my capital in a secure financial instrument that can then be utilized by a business or financial institution more directly to support the clearing of my payment, right? Right now, this is very kind of siloed. And as an individual, there's a lot of intermediaries who take profits or revenues from utilizing my capital in productive ways. And I think DeFi is giving us an opportunity to kind of create a direct path. And that's important because I think that individuals are much more interested in kind of taking the risk and putting their capital into this environment. I think we are an economy right now where people are hugely yield seeking, especially in the West. And so if you can kind of create this path for direct capital contribution that eliminates so many of the intermediaries, then I think we'll see some really interesting things happening around providing more capital so that, again, the kind of digital asset ecosystem can benefit from having, smoother transactions, yes, less slippage, less spread, and the types of cross-asset, trades or transfers we're trying to do. So I think capital is a big liquidity gap, but I'm also excited about DeFi as a path forward to kind of filling that gap.
Yeah, Matthew.
Yes, sir.
Sorry.
Please.
Just to add to what Lisa said, I think it's very beneficial that these liquidity gaps are being filled by companies looking to meet local consumer demand for access to crypto trading. And you have a very big economic incentive for all the local exchanges want to make money by giving people access at a local level to trade cryptocurrencies by bridging these gaps. And as just a regular marketplace perspective, this way of seeding the beginning or I guess the ecosystem will make it such that eventually, or for companies that are aiming to provide more traditional financial services like money transfer, like AirTM, will have, an easier time rather than if we had begun our fight 10 years ago or 5 years ago, where this liquidity gaps were so wide, where being able to run a business on top of this infrastructure by helping or by leveraging it to use or to help someone move money from one country to another would have been impossible. And given Coinbase's IPO, it's easy to assume that Bitso will be able to get more money to acquire more local consumers to continue bridging that gap, and even to build more, just to expand into more countries and creating that, I guess, anchor, if you will, infrastructure at a local level with sufficient liquidity so that tomorrow another version of AirTM or even AirTM could leverage a more liquid market in more places. But it was initially because of people looking to trade money or cryptocurrencies, and companies like Bitso creating the infrastructure and liquidity to provide that.
It's interesting as just taking a step back, kind of as a payments person. First of all, on the capital kind of availability impacting liquidity, I would agree with this. I mean, one of the promises of blockchain and crypto is, I believe, on a daily basis, there's something like $4 trillion locked up in Nostro Vostro accounts all over the world, pre-positioned there simply to keep that liquidity path open. So in my perspective, one of the promises of not just Stellar, but blockchain and cryptos in general is freeing up this capital that's locked in these Nostro Vostro relationships and redeploying it around the world to be used in a more economically efficient manner, which should result in financial inclusion. So I think about that. The other thing I think about, the kind of converse to that, is that I think that currency, the FX market, is the largest global market in the world. I think something like $6.5 trillion in FX is traded every day. I think it's by far the largest market in the world. And the fact of the matter is some currency crosses work very well. They're very efficient. The banks know what they're doing. Big, large interbank payments, repositioning. I mean, if you're a corporate and you call up your bank and you want to sell $5 million USD and buy MXN, you're going to get good pricing. But again, it probably comes with the caveat of that Nostro Vostro lockup. But as I think about liquidity and capital and things like this, in your perspective, based on you're on the ground, you're working on this every day, what needs to happen with crypto liquidity, with the fiat on and off ramps, to even come close to approximating some of the efficiencies we have with major, USD Euro cross, for example? What things need to happen to make it more efficient, like that efficient market? And I know that you're involved in liquidity every day.
Yep.
I wonder if you have any thoughts here.
Yeah, there's a couple quick things here, and it actually gets back to the original question as well. And I appreciate very much Lisa's points and agree. There's going to be a lot of bumps in the road, especially when there are differing incentives from a overarching kind of regulatory oversight perspective. Liquidity is one of them, right? Where do we find pools of liquidity to do fill in the blank, whether it's trading, payments, real-time settlements, etc. I take one example, right? At least from our standpoint, when you think about inclusion, right? From the cross-border remittance perspective, right? If you're looking at 400 to 500 billion, yearly in just outbound flows from the U.S. to the emerging markets, that's 4 times foreign aid. And in the next year, it's going to eclipse foreign aid and foreign direct investment combined. In the next 3 years, foreign aid, direct investment, and capital markets transactions combined. Just the income economy. And more are gravitating to digital assets to do so because of settlement times, efficiencies, etc. So when I think about liquidity there, I think on and off ramps are key. Can I actually depend on a reliable network that will off ramp a payment to a beneficiary in real time? Or am I going to have a network problem because I can't get that off ramp to connect to me? That has real world today implications, both with respect to the consumer or the corporate, as well as liquidity broadly from an inclusion perspective, right? So how do we quote unquote mandate in a decentralized world, right? How do we create standardization? Liquidity is also being chased across networks, right? There are a number of different networks that, for example, stable coins like USDC are traded and transacted. Now, do I go across the Stellar network? Do I go ERC? Do I go across Solana? Do I go across Algorand? Do I go direct? Do I go peer-to-peer? And that chasing liquidity is going to be, where's the path of least resistance? And the ability, therefore, to go from that stable coin to actually meet the everyday need, like Ruben and Lisa were talking about. So from the standpoint of sort of the liquidity, I believe that it's going to chase those efficiencies, those sort of real-time needs, until and unless full virtual assets are entirely ubiquitous, which they're not. Which gets back to the other question too, which is in the near and intermediate term, you have to have efficient on and off ramps to get engaged with a virtual asset transaction, whether it's trading purposes or payments purposes, to the ACH rails, to the wire rails, etc., so that I can actually pull out local currency. And that, I believe, is where it's a bit top of mind from an inclusion perspective, and that's where standardization and interoperability actually lends to the liquidity challenge.
Yeah, I totally agree with that. And then you start to say, well, where do those on and off ramps source their capital, right? So they can really ensure that. And so, I went super DeFi to begin with, but I'll swing back the other way. I think part of this too is just this kind of slow supply chain migration, right? And we kind of have created this new settlement system, asset class, an ecosystem. And now we just kind of need to slowly start porting, some legacy kind of infrastructure from the old system into our new system. So, part of that is like, can our on and off ramps, and we've certainly talked about this before, Matthew, like how do we make it easier for them to borrow? Like how do we start, pulling in capital sources, more legacy capital sources, and showing them that, putting capital into these ecosystems can have return, and creating, mutually beneficial relationships all the way up the supply chain from, I'm the wallet that's, holding the digital assets, I'm the on and off ramp, that's helping to facilitate to, I'm maybe a more traditional financial institution who's providing capital and, FX desks and FX market access to help support, this industry's kind of movement of funds. So, I think we have a lot to do and kind of building those relationships out. And, I think, nobody's going to come to the game if they don't think that there's some food onto the table for them. I guess I probably should say dinner, not game. So, I think we also have to prove that there is real revenue opportunity here. But I do see that as being part of the equation too.
Yeah, I love this topic about liquidity, because it intersects kind of everything we're talking about, like capital, regulation. I think Danelle from the CEO of STF has even talked about, without liquidity, a lot of the use cases don't drive. So it's a fascinating topic, one which I'm sure we'll debate in full moving forward. But in the interest of time, I think we're going to move on to our last question. And Ruben, I'll start with you. And this one is our contrarian kind of area of our debate. So 2 questions, starting with Ruben. Are cryptocurrencies in a bubble today? And what do we think will happen during the next economic downturn? On the spot.
Yeah, it's difficult to say that they're not in a bubble. Because everyone who's bought into cryptocurrencies does not have a fundamental level understanding or assessment of why they bought that cryptocurrency, right? If you could argue against that, then maybe you'd say, okay, we're not in a bubble. A lot of people are in it because they want to make money. And I think it's very cool that we are able to slowly transition, and getting back to the liquidity question, to a use case that's actually driven by solving someone's problem, right? And I guess the issue is, and I'm afraid for building on top of the current crypto exchanges rails, because what happens if you come to rely on them and then from one day to the next their liquidity ends, right? And you were counting on them to be able to deliver money to your clients. And as Lisa said, it's going to be a slow transition. And luckily, big banks giving cross-border services to small retail consumers are making so much money off of that, where it's a lot of margin to play for us and to bridge the gap that there is in this lack of liquidity. But I am afraid of the crypto bubble bursting, and a lot of the infrastructure that's aspiring to be built on this infrastructure to be impacted by the pop or a long crypto winter.
Yeah, it's interesting. I would probably agree that we're in some sort of bubble, but taking a kind of a step higher, I believe that there's a bubble in a lot of assets, not just crypto. I mean, real estate assets, equity assets, a lot of commentary that these are all kind of in inflated prices now. But yeah, it's an interesting question. I was wondering, Amit, you were shaking your head, nodding your head. I believe you have some thoughts on this.
Yeah, plenty. Ruben made a lot of good, insightful comments. There's one in particular that's worth reinforcing. What bubble are we talking about when you get down to a specific use case, right? And that's why I brought up the sort of payments and sort of remittance piece, right? From an inclusion perspective, like there are plenty of folks in the crypto universe that are entirely profit seeking to try and take advantage of both arbitrage opportunities, the lack of liquidity in certain asset types to do pairs that will spike their own margins that have very little economic value outside of their pocketbook. That is happening in droves. And that's what the capital markets do, right? They innovate in ways that can find extractive value in these different innovative asset types, right? The modern derivatives market, how that whole financial collapse happened in terms of financial innovation in the last larger bubble crisis. But you're right, we're seeing these asset bubbles in a number of different spaces. And I would go back to, how do we look at explicit and specific use cases where bubbles may be forming that actually impact real lives? If, for example, the day-to-day application for me to just send a couple $100 to a family member that needs a medical treatment in a foreign market, and I can do so instantaneously, I want to work in an asset that will preserve value at both the on and off ramp and has stable value. I don't want to be trading, and I don't care about liquidity in esoteric assets that have a lot of market volatility. If I want to start a small business, and the fastest way I can do that is by going to a digital asset lender and do so to get $1,000, $2,000 to just start my my new business, I'm going to go to where I get the biggest value and the cheapest form of that capital, right? If I want to attract yield because my local banking is giving me 0 or next to 0%, but I can actually hold value in a higher yielding savings instrument, I'm going to gravitate there. And so I think we have to look at those bubbles that impact real lives. And that should be driving the inclusion piece. And again, it gets back to the second topic and the first topic of kind of how do we formulate an incentivized governance structure that brings transparency and protection and safety in ways that really take advantage of what the crypto universe really has to offer. And that's what I'm hopeful for. That's what I'm long on. Again, it's just a nicer existence to be glass half full versus glass half empty. So I tend to take that more positive view. But I mean, I get very jazzed working with Ruben, Lisa, and folks at AirTM on the power that bringing digital dollar accounts to anyone so that you can create stability and a mechanism for the transfer of value for everyday needs. That's core. I'm less concerned or interested in how do I provide extractive value to take advantage of different currency pairs because there's a lack of information between different crypto assets, right? So that's the excitement that I have. And I think that from a regulatory perspective and a liquidity perspective, as we think about this bubble, I think we should think about where are the real bubbles and what can we do to mitigate those when they are about real life use cases and building economic resilience.
You know, so thank you for that. It's interesting. I think in the past, we always heard that cryptocurrencies were decoupled from other markets, decoupled from the equity markets. It was counterinflationary, et cetera. And I believe that thinking started changing around 2000, about 2 years ago, where now that institutional money is flowing into crypto and the use cases are expanding, there's some current commentary that cryptocurrencies may not be decoupled either positively or negatively, but correlated in some way with other financial markets like equities. And when I think about, you know, this concept of what happens during the next economic downturn, if we're in a bubble today, what's going to happen? I think there's going to be some new thinking about this because I don't think it's an automatic assumption anymore that cryptos are decoupled from other financial markets and are counterinflationary. I think it's very murky now. So Lisa, please.
Oh, I was just going to say, you know, yes, I agree with that. You know, I would say I agree with Amit's comment that like overall, it feels like we're in a fairly heated market. It's also just there's been a lot of things changing in the world in the past 2 years. But yeah, I agree. I think we're seeing much more correlation. And the truth of the matter is, you know, the crypto market is probably one of the most risky markets out there. And when economic downturn happens, you move out of your risky asset class. So I do think that when it hits, it's going to hit hard. But as somebody who's been in the industry for a couple of years, I'll say, you know, some of the slowdowns in crypto have been the best times. And, you know, it's when you kind of are able to see what's really valuable and what's just, you know, foam on the surface that's being really choppy. So I think that there is a ton of evidence. And I looked up a couple of things and that's what I wanted to mention. You know, the IMF estimates that over 110 countries are in some active stage of CBDC development right now. You know, the US Treasury publishing this month a report on stablecoins, proactively planning for them to exist in the market. You know, this isn't something that is a fad, it's very real. And I think a last data point that I was really excited about, to Amit's point, is Chainalysis released a report earlier this year, just looking at crypto transactions and specifically remittance payments. And if you compare transactions of $1,000 or less that are remittance payments to Africa, since 2019 to 2021, we've seen a 3x increase in that moving forward. And, you know, so what does that look like? You know, 150, 200 million annually in a $40 billion industry. So we're not knocking anything out of the park yet, but we are seeing in a very hard to play space, real growth in the utilization of this technology to execute those payments. And for me, that's super exciting. So like absolutely on the surface, there's speculation, it's a little bubbly, but like an iceberg, I think there's just so much real value under the surface. And once things calm down, that becomes very evident. And that's, I think, exciting.
No, I agree.
Just to add to that, sorry, Matt, but you know, the reason why liquidity is so important at a local level for financial inclusion is to be able to deliver a good remittance, right? Speed and cost. But what happens if people don't want to cash out? What happens if people can just stay with the USDC they receive? What happens if they start telling their family and friends that, hey, I can pay you in USDC or an AirTM, right? Then liquidity maybe becomes less of a problem. And at the end, a consumer is not looking at liquidity. They're looking at how much money they sent and how much they're able to cash out. And if they notice, and consumers are smart, we're smart as people, that they could keep 10% more money if they don't cash out, but rather convince their landlord of receiving $1 payment for rent, then maybe the need for that liquidity is well diminished, or it is. Not maybe, it just totally is. And I think that will have a big impact in, I guess, the way we value liquidity in the future, because, you know, it won't necessarily be needed. What it looks for AirTM to be successful for everyone just to be on the US dollar economy via USDC or some other stable coin. And that implies that, you know, we don't need local financial systems necessarily as Latin Americans. And that is true value. If we are able to shift that paradigm, we are generating true value today to people, right, in the ground. And so no matter what happens in the next few years, as AirTM grew during, I guess, the first crypto winter, it will continue to grow because remittances will continue being expensive. And if we can continue giving these retail financial services in a better way, solving the same problems that we've been trying to solve for 30, 40, 50 years, 100 years, then, you know, there's a lot of people will benefit, and any crypto winter bubble burst won't really impact that.
You know, it's an interesting debate, and the reason I like is it, you know, it intersects against policy and liquidity and use cases, to Amit's point. So back to, I would say, you know, kind of a corollary question, kind of, you know, hot off the presses, as it were, and it relates to some of the things we've been talking about consistent with LATAM and hyperinflation. There's been a lot of press recently in the US about the top line inflation number at 6+%. Inflation is, you know, people are saying, yeah, the US solved inflation for 20 years. Well, that, you know, that thinking is currently being questioned. So real quick, you know, kind of quick Q&A, is inflation a positive or negative for cryptocurrencies? Tough.
Ooh, yeah, I'll say positive. If people are chasing yield, I think we'll have more attention. That's my hot take.
Although, could you say that it's because of inflation that crypto is doing so well, right? Is it because everyone in America has so much access to cheap capital, or free sometimes, that the price of Bitcoin and its limited supply, that Bitcoin is worth so much?
Yeah, even Mark Cuban has talked recently about, he believes that one of the reasons the unemployment number is at the level it is in the US is a lot of younger consumers are buying Bitcoin and getting yield on, you know, crypto assets instead of going out and looking for a job. And that, if that's true, that creates inflationary pressure.
Yeah,
is a way bigger yield.
The direction is important. The direction is important. I think that's a very, very important statement. And also, I would just like, people need to unpack what's in the inflation number, right? We take a lot of real economy stuff out of that number. And so we have to really understand what inflation is. I mean, gas prices have been going up pretty consistently over the last couple of years. And like, do they really constitute what's in that inflation number? And the other piece of this too is, again, at the end of the day, we're chasing a way to hold value securely, right? That it maintains that value securely, and that I can transact in that value where the counterparties can understand and receive that value. That's what we care about. So does that mean everyone go to Bitcoin? right? But does it mean going to stablecoin to actually effectuate those payments? Maybe, right? So I think that the direction of that causality is really important. I think the advent of more digital assets in their numerous forms give us opportunities to hedge against inflation, as well as maybe also see where there could be detriments to our again real economy pieces.
Well, we're at time. This has been an awesome discussion, a lot of fun. I've learned a lot, and that's always a good experience for me. So I would like to thank Lisa, Ruben, and Amit for joining us today. And with that, I will turn it back over to Justin. Thank you, everyone.
Thank you for having us.
Thank you.
Thanks, Matthew, and thank you, Lisa, Ruben, and Amit. You know, it's interesting, Santiago was affected by a local power issue, but the conversation, like the Stellar Network, was fault tolerant enough. There were still enough participants to keep it alive. But anyways, thank you all for being willing to go out on a limb, share your predictions for 2022. There's so much potential in front of us. And on that note, we're going to end the program with a couple of presentations from SDF leaders about our technical vision and roadmap for 2022. So given all the developments on Stellar this year and all the advancements we're seeing across the industry, what is the path forward for the Stellar Network? More on that when we return from our next break. All right, I am here with our last quiz question, Meridian. And the question is, each Stellar transaction consists of how many operations? Options are 1 to 10, 1 to 12, 1 to 64, or 1 to 100s. 100, 1 to 100. Get your answers in using the quiz tab, and I'll be back in a couple of minutes with the correct one.
Today, we're going to talk about the real-world use cases and how they relate to Stellar ecosystem protocols. In this talk, we'll be talking about the anatomy of an SDK, and we'll be taking a journey through that.
Today, I want to talk about DeFi on Stellar Tours. But first,
we wanted to take this opportunity and walk you through the high-level design of Stellar Core.
And then we're going to look at some of the exciting ideas that we're considering next as we look to the future for Horizon.
I'm going to walk you through every wallet and Anchor's favorite journey, the KYC journey that Vibrant has gone through.
We've been experimenting with Layer 2 to see if there are capabilities we could bring to Stellar users, specifically Stellar users who need to process large numbers of payments.
Along the way, we'll see how two new proposals, CAP 21 and CAP 40, make Starlight possible, simple, and efficient.
Okay, everyone, the last quiz question was, how many operations does each Stellar transaction consist of? Correct answer, anywhere from 1 to 100 operations. That's a unique feature of Stellar, right? A transaction can consist of multiple operations, as many as 100. Each operation can essentially do something to the ledger. So operations include things like payments, entering orders into the decentralized exchange, changing settings on accounts, authorizing accounts to hold assets, that kind of thing. And the fact that you can combine and compose multiple operations in a specific order in a single transaction makes it easy to do some pretty neat stuff like manage access to assets you issue. If you were one of the first 3 people to answer correctly, you will be contacted post-conference to claim your prize. Don't worry. But now, I'd like to introduce our VP of Tech Strategy, Tomer Weller, to lead the next presentation, Stellar's Future, a Technical Perspective. Building on recent advances in interoperability and cooperation by trusted parties, he'll outline a vision for Stellar's expanded reach, including scaling, bridging, and DeFi initiatives. Tomer, over to you. think he's going to share a screen and have an awesome presentation momentarily. I see a slide, Stellar's Future, a technical perspective. I'm so ready for the words to go along with it.
Hey, Justin, can you hear me?
I can hear you now.
Awesome.
Welcome, Tomer. Take it away.
Thanks. Hey, everyone. I'm Tomer Weller, and some of you might remember me from yesterday's sessions. And I'm back today to help close out Meridian with a look at our tech strategy for Stellar in 2022. So first, let's take a look at what we prioritized for 2021. So 1 year ago, we announced our 2021 focus would be liquidity. And it was. Liquidity was on the top of the list because the ability to move freely between different assets is at the core of enabling cross-border payments and financial inclusion. And to that end, we worked with our ecosystem, hosting roundtables and protocol discussions. We kicked the tire in a bunch of different ways so we could improve liquidity for the network. And this resulted in a string of projects, from launching Stellar USDC, as well as various collaborations with market makers and exchanges. And this ultimately led to the adoption of protocol-level AMMs, automated market makers, earlier this month. And in less than 2 weeks since launch, we've already observed more than $14 million of total value in liquidity pools. That's according to StellarX. And that number is increasing every day. More than that, 40 to 50% of swaps, path payments in Stellar, are consistently going through the AMMs. That means that AMMs are providing more efficient asset conversions than Index 2 weeks after launch, which is pretty wild. So the success really shows the importance of having focused goals. And in 2022, we're going to continue investing in our core strengths. We're going to make sure that Stellar is a robust network. Stellar is the Toyota Prius of blockchains. It might not be the shiniest, but it's dependable, sustainable, and always works no matter what. As a testament, even when the SDF validators were down in April, the network kept processing transactions in a timely manner. As a matter of fact, even with increased load this year, the network processes 99% of ledgers closed within 7 seconds. So I want to repeat, over the past 6 months, 99% of the ledgers closed within 7 seconds, 7 seconds to finality. That's pretty awesome. Interoperability. We have the Anchor network. They're built on a rich set of interoperability standards, and those standards are going to continue growing. And we'll need to adapt to the needs of the financial institutions that are building on Stellar. MoneyGram's recent integration, for example, which went live in less than a month, proves the power of having an open ecosystem built on open standards with a plethora of open source tools. So building on these core strengths, here are our priorities for 2022. So I see 3 key areas of opportunity for us. First, layer 1 scalability. In addition to our payment channels work, we're also seeing an increased level of on-chain activity, and we want to ensure Stellar is able to seamlessly handle this load as more and more payment networks are integrated. Second, we want to extend our interoperability story beyond traditional finance and into other growing cryptocurrency ecosystem by building bridges. And third, Stellar has been incredible at growing with trusted innovators like our Anchor network. But now we want to expand and further explore trust minimized innovation. So expanding the work that we started with AMMs in order to explore and prepare for future innovation, technologies that we haven't even considered yet. So let me get a bit more specific over each of these things. L1 scalability. So in the past, we've avoided measuring scalability in terms of transactions per second, or TPS. And why is that? Performance is nuanced. It depends on many variables, such as network topology, validator hardware, shape of traffic, amongst others. And some of our competitors make bold claims about TPS. These are often based on perfect condition tests with high-end expensive hardware, which, if your stated goal is financial inclusion, doesn't really make a lot of sense. So we want to do better at that. We believe our ecosystem deserves an accurate and transparent measure of Stellar's performance. So over the past 5 years, we've been collecting information about the public network. We know the shape of real payments traffic. We understand hardware constraints and the networking resources available to the validator community. We also have a very deep understanding of the networking resources that are available to the validator community. Using this information, we've been able to build realistic network simulation models, and we are now committing to continuously measure and publish sustained max TPS figures starting in 2022. Our first milestone will be to reach 5,000 TPS in 2022. Why 5,000? From speaking with our partners and tracking metrics of real payment systems, we believe that's more than enough as a starting point to facilitate the growth of the network in the coming years. So how do we get to 5,000? A big part of that is SpeedX. SpeedX is a new approach for building a decentralized exchange based on batch trading. It was conceived by Jeff Ramsar, who is a Stanford PhD candidate, and he also happens to be a researcher here at the SDF. I highly recommend checking out Jeff's tech talk from last week and blog post about SpeedX. These were just released from Meridian. But if we take a closer look at how it works, the gist of SpeedX is that by turning trades into commutative operations, we achieve an equal level of access to markets across our users. We also combat front running or risk-free front running. And this point is important because one of the biggest flaws of decentralized exchanges is the ability to front run because of open participation. SpeedX solves that. And most importantly, it allows us to achieve scalability via parallelism, which takes advantage of modern multi-core processor architecture. And SpeedX is a unique fit for Stellar because it requires trading to be done at the base level in the base protocol. You cannot implement this as a smart contract on some other smart contract network. Moving to our next priority, cryptocurrency bridges. Stellar was built to bridge between payment systems, and we've done so successfully through a set of trusted, interoperable on and off ramps. Our anchor network is exactly that. The next frontier of interoperability is bridging to other cryptocurrency ecosystems. Now, we live in a multi-chain world, and that's great. We're excited about that. And Stellar already provides users expanded access to a global network of fiat assets. Bridging also gives them access to a growing selection of innovative financial services outside of the network. So this is what we're going to do. First, we'll continue to support ongoing efforts to develop bridges by ecosystem teams. Flare is one example. Pendulum is another example. Speaking about Pendulum, you can see their preview video as part of Meridian. It's pretty cool. We're also launching a work group that includes Stellar engineers, both from the SDF and other ecosystem companies, making sure our tech stack is ready for these type of bridges. And finally, I'm happy to announce bounties. So I'm happy to announce that we're introducing a new bounty program for Stellar developers. The bounties program will complement the Stellar Community Fund, SCF, and our R&D grants, allowing developers to work on some of the most interesting, challenging issues in our ecosystem. And the first bounty will be for building trust minimized bridges, cryptocurrency bridges, and we're going to publish the details in the upcoming weeks. Stay tuned. Lastly, we want to ensure Stellar is on the front line of innovation. In 2021, we built AMMs, and this is only the beginning. We're committed to attracting more novel innovation to Stellar. In the next year, my job is to work with folks like you on answering these questions. What new innovation can we bring to Stellar? What might be coming around the corner that we need to get ready for? And what is already out there that we haven't considered for the network? We just talked about SpeedX, that promotes equality of access and eliminates front running. And we're also looking at a variety of other ways to encourage innovation on Stellar, while also preserving the robust nature of it. And this is where you come into the picture. What would you like to see in the next Stellar? What would you like to see next in the Stellar ecosystem? And as we continue to build out Stellar together, we want everyone involved. So if you're a developer, engineer, designer, sorry, anyone building on the Stellar network, please join us on the Stellar Developer Discord server and the Stellar Dev mailing list, and we can do this together. In fact, if you're watching this live and want to get started immediately, I'm going to join an open AMA on our Discord server in about 30 minutes right after Danelle's closing remarks. I hope to see you all there. So thanks for listening in, and I'm going to send it back to Justin. Justin, I hope you're keeping hydrated between these sessions.
I am trying to stay hydrated, but it's hard to rip myself away from all the compelling content. Tomer, thank you. And also, I'm very excited for that AMA. As part of our doc sprint, we launched this developers Discord. We've been pushing people there. If you want to find out more, you can go to meridian.stellar.org, where you can find out about the doc sprint and also find out how to join that Discord server. You can go and meet Tomer in that AMA. I got to say that the technical vision for 2022 is very exciting, very challenging. And I know that we at SDF are ready to do what it takes to make sure Stellar is a global leader in blockchain payment technology. But as Tomer said, we can't do it alone. So if you are listening and you are fired up about this technical vision, please voice your opinions, stay engaged, build along with us, join that Discord, join the mailing list, talk to us. We're here for you. We have now arrived at the last session of Meridian, and it's time for me to say goodbye. Goodbye, everybody, and hand it over to our CEO and Executive Director, Danelle Dixon, who's back to wrap up the program with a presentation of the Stellar Development Foundation's strategic initiatives for 2022. She'll share insight into the work that SDF's cross-functional teams have done to inform the path ahead, and she'll explain our vision for what we hope to achieve together. Danelle, the floor is yours.
Justin, thank you so much for this whole last 2 days. You've been amazing. It's so awesome to have you be able to do this for us. And I just can't stop thinking about how we're like a Toyota Prius. I didn't know that we were. So this is pretty awesome. I learned a lot from Tomer, and now I just learned that. So first, Meridian, like big thank you for tuning in. This is so awesome to have you all here. I wish that it was live and that we could do this in person. But I know that we're going to try to do something in person in the first half of 2022. So stay tuned for details on that. But as the next best option, it's been awesome to see you all virtually. So let's get started. Over the last 2 days, we took a deeper dive and look at our work this year and had some incredibly informative debates. The chat lit up about AMM functionality, community-driven initiatives, and speakers. Reactions to hot topic debates and hot topics and previews of our future technical work. And then the energy carried over to this first ever Meridian Doc Sprint. Hundreds of you jumped into Discord to pitch in and bring brand new ideas to life. So thank you for your energy and your passion. Meridian is a really special time. I've said that a couple times because it's when we come together from all over the world to show how local efforts make a big difference globally. For example, when Jose Maria Figueres, former president of Costa Rica, told us yesterday that coming out of the crisis, the world's economic recovery is going to need technology like ours to improve the well-being of people all around the world. Or when Shivani Saroya, CEO of Tala, shared how blockchain infrastructure is going to deliver added value to their widespread customer base in a way that is adaptable to markets. She talked about how in one market, customers may have more demand for a savings product, but in another market, they may have more demand for payments. The flexibility of Stellar and then blockchain is going to help with this, and it's going to help Tala customize more easily for those needs. Or when Alex Holmes, the CEO and chairman of MoneyGram International, talked about our new partnership, sharing what a massive step forward it is for traditional financial payments, bringing a real-time settlement flow for their consumers. And I just have to say, I loved watching the debates today. Talented, knowledgeable folks sharing ideas on how to think about these issues. I loved it, but I'm also a really big debate fan. All these thought leaders across our ecosystem made this theme resonate. So why did we pick this theme for Meridian? Building local to solve global challenges is not just a theme, it's a learned experience. What we know is that the best solutions come from those who truly understand the problems, challenges, and obstacles of any specific region. There is no one-size-fits-all solution. So we need to engage and support and grow local solutions and allow them a global stage to truly bring the financial world together. Building locally for global impact is happening on the ground today with real live use cases on the Stellar network. Here are a few examples of how companies in our ecosystem are using Stellar to solve the unique challenges of delivering financial services in their own markets. This is what we mean by building local for global impact. In the US, we benefit from a fairly stable US dollar as our currency. In fact, we probably take it all for granted. But in Argentina, Venezuela, Colombia, and around Latin America, currency devaluation is a real concern for citizens. And traditional banks in those regions haven't necessarily provided a solution. But blockchain has already helped. Based in Mexico and serving markets across Latin America, AirTM, and you just saw Ruben not too long ago here, created a mobile money app that connects with over 400 different banks and e-money networks, so users can send, hold, and receive value in different currencies. The AirTM service has completed over 16 million transactions for 1 million plus members. So users save on cross-border currency transaction fees, get money faster, and are able to keep value in an AirTM international account, safely stored in digital dollars. Here's another example. Moving value from Europe to Asia on traditional financial rails can be complicated, slow, and expensive. So a new anchor on Stellar called ARF has solved the technical and compliance hurdles for companies struggling with this problem. Perhaps being from Istanbul, where cross-continental travel from Europe to Asia is as easy as crossing the Bosphorus Bridge, ARF's founders knew there could be a better way. So now ARF helps connect European anchors all the way to the last mile payouts in the Philippines, utilizing Stellar rails and stablecoins to bridge between financial systems. And finally, we continue our journey east and south to Africa, where local payment provider Flutterwave has started using the Stellar network as an improved method for routing remittances and payments from Europe. Many families in Africa depend on money received from family members working abroad to cover their daily cost of living. Remittances are essential. Fees in Africa remain high, and it can take days to process a payment. Integrating blockchain solutions can be a huge help. And so this fall, Flutterwave partnered with Paris-based Stellar anchor Tempo Payments as a fiat acceptance partner in Europe. Now, customers can make a remittance payment in euros and have it land in their family member's local bank account or be collected in cash in their local currency. This year at Meridian, our theme is about building local to solve real-world problems using a global network. That's what Stellar was created for and what SDF is set up to support. So I always like to set the table before sitting down. And for our purposes, what that means, what I want to do is describe SDF, who we are and what we do, so that each of you can not only engage with us, but can hold us accountable to our words and our work. We're a nonprofit, non-stock Delaware corporation. Not having shareholders is really important because we're not beholden to any person or any group. We are focused solely and beholden only to our mission. We're not a charity. We pay taxes to the US and to the state of California, and we use the capital and assets that we have to make Stellar a success. We have a mandate, and that's publicly available on stellar.org, where you can track SDF's assets and learn more about our grant programs. And all of these assets that you can see on the mandate page are used to achieve our mission. And our mission is creating equitable access to the global financial system. There's a lot of work to be done toward our mission, which is something that is not achievable overnight, but addressed, and it can only be addressed one solution at a time in focused efforts. And that's how we look at our annual strategy work. We also peg our work against our 2025 goal to be the global payment standard, interoperable with the world's financial systems and supporting more and more locally focused applications being built on Stellar. These are both super lofty and powerful, and it takes all of us who are part of this ecosystem to make both of these happen. So a year ago at Meridian, I spoke to you about the cross-functional SDF teams we brought together to investigate areas of highest potential impact for Stellar. And what came out were our priorities. So here's an overview of what we worked on and the progress we made in 2021. Every one of these initiatives was addressed. In some cases, we had super ambitious targets. We had stretch goals that we knew would span beyond 1 year. Some were explorations of the unknown, from expanding practical use cases and addressing liquidity challenges to reaching out for high impact partners and making strategic investments. Our whole team at SDF made incredible progress against these objectives. I want to recap a few particularly exciting achievements that came out of this work. So first, our Stellar Development Foundation Enterprise Fund really arrived in 2021. So after a soft launch in 2020 with a few investments under our belt, the Enterprise Fund made incredible progress toward improving network participation by funding companies that brought new use cases like fiat interoperability, that's Wire, and important services in Latin America, such as small business lending, Tribal, and consumer spending accounts with US dollar savings, RTM. And we invested significantly in Tala, a financial services company that exactly aligns with our SDF mission of driving financial inclusion in emerging markets. Tala's millions of users will benefit immediately from access to digital assets for sending, receiving, saving, and spending from their mobile devices. So we're super excited to be a part of Tala's next phase of growth, especially as they implement their Stellar-based assets. So together, Enterprise Fund investments to date total over $70 million in 11 amazing companies. All of this in just over a year's worth of work. In 2020, we set out of doing five times relevant transaction volume on Stellar. It seemed ambitious because back then we were closing in on the milestone of about $100 million equivalent value for the year. So to get 5 times the volume would be $500 million more in 2021. I'm excited to report that for the first 3 quarters of 2021, we're at $829 million in relevant transaction volume, over 8 times what we measured last year at this time. Another way to look at this progress is something that we talked about last year is in the first 3 quarters of 2021, Stellar Network performed over 1 billion operations. So let me put that in context, because last year we hit the 1 billion operation milestone from the network's creation. So that was a few years to get to 1 billion, but we're now doing more than 1 billion each year. This is significant growth. It indicates to me that we're on the right track, that Stellar is providing useful solutions to solve important problems. At the close of Meridian 2020, we knew some of the most important and challenging work for this SDF team would be onboarding new partnerships and connecting those companies to each other to form payment and remittance corridors that could enhance the utility of the Stellar ecosystem. Sending and receiving countries often have different infrastructure, regulation, and payout preferences, not to mention the everyday barriers of different currencies, languages, devices, and time zones for collaboration. But through the persistence and the grit and the creativity of our Stellar ecosystem companies, the SDF teams and the SDF teams that support them, 6 new cross-border payment corridors were established in 2021. New pathways for payments to and from African countries were established by Tempo and Flutterwave, as well as by Cowrie and Finclusive, and also Tribal, Finclusive, and then fintech company Tribal and Mexican exchange Bitso leveraged USDC to enable new B2B payment options in Latin America. Which brings me to the final 2021 achievement to highlight. You heard Tomer just talk about this a short while ago. Our most ambitious technology initiative of 2021 was kicked off because of last year's list from Meridian. A year ago, I said we would explore the feasibility of automated market makers on Stellar. And on November 3rd of 2021, Protocol 18 was validated and accepted, incorporating AMM functionality into Stellar at the protocol level. One of the earliest layer 1 blockchains to launch AMM functionality and bringing a whole new mechanism for liquidity provision to the network. So we're only 14 days in since the protocol went live. And we're seeing from StellarX, I just checked it before I came on, that over 14 million in value has come onto the network into these liquidity pools. This means more efficient pathways. Notice about 50% of these swaps are now routing through the AMMs for cross-border transactions and the ability for developers to flexibly source liquidity support for any Stellar-based project on demand. So as you can see, this ambitious goal from a year ago turned into one of the most significant additions to the network since Stellar launched. And it all started last year with cross-functional teams sitting down and deciding that yes, liquidity, it's important. And then engaging with the ecosystem proposal on AMMs. It shows the power of an open and dynamic community. And that's what we have here. So now I'm excited to turn your attention to this year's strategic objectives. For the last couple of months, teams have been working to uncover our areas of highest impact toward the SDF mission in 2022. Like last year, as part of our focus on strategy and inclusivity of ideas, we put together a Tiger Teams to focus on 5 topics. So how to increase investment of all types into the Stellar ecosystem, how to ensure that we are creating a high value, scalable ecosystem, which geographies should we continue to focus on and build in, what does the long-term Stellar roadmap look like, and 5, how do we prioritize diversity, equity, and inclusion in the growth of the ecosystem. So one of the things that I'm most proud of and I'm most excited about is how each cross-functional group, they took a really holistic approach, looking beyond the walls of SDF, which is truly the point, digging for root causes and trying to understand and address the deep inequities faced by people excluded from financial access. And here's the result. 5 initiatives were committed to advance in 2022. Drive utility, activate participation, fuel ecosystem growth, demand inclusion, and impact policy. These are the findings of the cross-functional teams and where we plan to spend our energy in 2022. So I want to just take a closer look at the underlying strategy and how we plan, at least right now, to tackle each of them. So scalability, speed, interoperability, and bridging are at the heart of our objective to make Stellar the world's most powerful payments network. Stellar exists to solve real-world problems, and so we must connect it to the world's financial systems in the most frictionless way possible. To increase scalability and throughput, we'll be making efforts through innovations like SpeedX, which you heard Tomer and Jeff talk about, improving Stellar Core, and continually assessing potential updates to the AMMs. Tomer's discussed some of these just a few minutes ago, and he went into a bit more detail, but this is going to be a huge focus for us at the SDF, and I'm hopeful for those of you out there that want to engage in the community. We'll create new engagement models to partner with businesses and apps that offer high demand services like lending and yield, and useful feature-rich solutions tailored to local markets. More tools, more wallets, more use cases, more utility. And this scalable network is going to lead to more engagement on a broader ecosystem. So we have an opportunity to leverage the amazing people, resources, and our own ecosystem in new ways. This objective is all about driving engagement. As I was sitting in the chat and I was watching today in some of the debates, some of the chat was about the need for us to engage more. Creating avenues for two-way and multi-part communication and feedback loops that inform the future of Stellar. We will strive to connect with the stakeholders who matter most to Stellar and to meet them where they are. We want to amplify the work of our ecosystem, empower its participants, and create deeper connections. We can be even more transparent, better listeners, and even have some fun with the ways we communicate externally. So I want you to see more of that from us because I think it's a lot of what you guys have demanded from us. Our plans can take the form of everything from a future forward public roadmap, which we're really, I find this really important, that we need to publish a long-term technical roadmap for Stellar so that you know what you want and can engage with when we're focused on the growth of Stellar. We want to expand Stellar Quests. So to activate, it's activating people as ambassadors and advocates in the ecosystem. In short, we want to engage with the world around us in new ways and for more people to know about all of the amazing things happening on Stellar. So with even more engagement, we can build partnerships to create more investment into ecosystem companies, bring more companies to the network, and create even more excitement around these new use cases that are being built. So whether sourcing deals or doing due diligence or helping support portfolio companies, enterprise investments is a group effort. So at SDF, we want to fuel the growth of our ecosystem by expanding the enterprise fund's investment reach and collaborating with meaningful partners in the venture capital space. We also have a keen focus on local relationships. That could mean hackathons that are local hackathons. It could also mean that we're going to focus on some accelerators in local markets. We've already done some of this, but this is room for us to do a lot more. We want to identify areas of impact that might otherwise have been overlooked in emerging markets. And this focus on increased investment will turn into more focus on local building and a more inclusive network. The opportunity to challenge and to improve diversity and inclusion is enormous. We looked at a multi-layered approach to drive inclusion at SDF and in the entire ecosystem. Our plans include direct support of developers and communities to improve financial access in emerging markets, funding specific research to identify local needs. Research is so important in our space and we just don't have enough of it. And prioritizing growth in underserved regions. And to communicate clearly that we demand and promote inclusion at SDF while proactively inviting participation that drives diversity. Next, we turn to an area that creates clarity for the industry as a whole. There remains a lot of work to be done toward informed policy and regulation, both in the US, but also around the world. Our goal at SDF is to make meaningful connections and have conversations with policymakers and drive toward regulatory clarity for all. SDF is going to continue its involvement with industry organizations and help educate on best practices for regulatory frameworks. And I think most importantly, the key is to use the use cases that that are being used already on blockchain to demonstrate the value of this technology, to speak at the use case level, not necessarily the tech level. Overall, we want to be more vocal, take more positions publicly on important issues, and work to advance an agenda that is consistent and equitable and fosters innovation. So that's our 2022 strategy. It's a whole lot. We're going to push ourselves though. We're going to continue to push ourselves forward and hopefully you'll do the same for us. By focusing on these key initiatives, we're going to strengthen our roots and nurture new opportunities for growth in the ecosystem with the mission of creating equitable access to the global financial system. We're so very grateful to be here, doing this important work with all of you. But before I wrap up, I want to be really direct with all of you about something. Let's get real. Stellar is where it's at. Look, we're in an industry where there can be a lot of hype, sometimes warranted, sometimes not. But I don't want anyone to forget that Stellar is one of the pioneers of this industry. That maturity lends us a lot of credibility we need to help stakeholders be successful. But make no mistake, we're not resting on our laurels. Stellar may be crypto OG, but we are not stuck in the past. I constantly challenge my team to push us in new directions, to act with urgency, to innovate, to be creative, to think of the things that haven't been thought of yet, not only with the technology itself, but with the ways that we as the foundation can support and drive innovation by you, the builders, the innovators, and the developers. We are one of the early innovators in this space, but I'm here to tell you, we're committed to maintaining our position as a leading innovator as well. And I challenge you, our ecosystem, to do the same. We've got your back. We're here to support. So I'll bring the day to a close and our program to an end. From all of us at the Stellar Development Foundation, a huge thanks to each of you. We're very much looking forward to seeing you all in person next time, hopefully soon. So long, Meridian. Thanks everyone for a great 2021.